fundamental analysis, the next part, that is the market capitalization. Now, I told you what fundamental analysis is. So, fundamental analysis is analysis where you see the actual company's worth. You see how good a company is and try to find out what the actual price of the company share has to be. So it's unlike technical analysis where you see the graph. Here you see the fundamentals, the numerical values of the company. So this is called fundamental analysis. Now here in this video we will be studying about the market capitalization. So what is market capitalization? So that is the most important question, right? Before you study something, you must know what you are going to study. So what is market capitalization? So market capitalization means it is the actual size of the company. So like I will give you an example. If you are buying a site, if you are buying a house, you don't judge the company's price or the site price from the just by seeing the plot size price, right? If you want to buy a house, if you want to buy a site, you cannot just guess that the price of the site will keep on increasing just because you are getting it for a cheaper price. So you cannot you have to consider multiple factors. You don't just consider the price of the plot. You don't just see that the plot is available for cheaper. So the price is not the only factor. It doesn't decide whether the price will keep increasing. So there are plots available in the rural area for cheaper price. Imagine you are getting a site for 10 lakh in the city and you are getting a site for 1 lakh in the village. Are both the same? Both are not the same. Both are definitely the different because the situation is different, the places are different. So that just because the size of the plot is same, it doesn't mean that the growth is same. In the city there are more chances for the price to improve. If there are, you have to consider multiple factors, right? So same way, you cannot just see the share price. If the share is available for cheaper, for example, there is a company trading at 200 rupees, you cannot tell that, oh, it is very cheap, 200 price is very less, there are chances for it to go to thousands. So I will buy the cheaper share and I will hold it for longer. I will keep holding the share. That is wrong analogy. And same way, you cannot tell 1,000 rupee share is more. So generally, what people think, I will buy many cheap shares, like 200 rupee shares, 100 rupee shares. I will buy multiple, and then there will be more number of chances for it to go to high, for it to reach to thousands. That is what people think, and people generally think that the price of a certain company is already so high. For example, a company X is trading for 1,000 rupees. So people think the price of the share is already 1,000 rupees. It cannot go further beyond. It cannot cross 1,000, but that is wrong. So the price is based on market capitalization. So for example, a company is trading, or you cannot even tell that 1,000 rupees just because the price of the share is more, the company is good. Even that cannot be considered. So there can be a company whose share price is very high. For example, the share price is 1,000 rupees, but the company has very little shares. So this means that the company is a small company. But whereas there is another company whose share price is 1,000 and they have lakhs, millions of shares. So that means the size of the company is big. So the company price also depends on the number of shares that are present. So that decides the company size. So that is what is market capitalization. What is the size of the company? So basically, we will be studying about the size of the company, and thus you will be knowing how good or bad the company is. So let's see. So what is market capitalization? Market capitalization can be found out from the formula this. Market cap is the price per share into the shares outstanding. So the price of a share is 100 rupees and there are 1 crore shares. So you multiply 1 crore into 100. That is the market cap. Let's take a smaller number. For example, the company has only 1,000 shares. So 1,000 into 100, the price of the share is 100. So 1,000 into 100 becomes then 1 lakh. So the market cap is 1 lakh. So that is how you see the market cap. Market cap is the actual worth of the company, actual size of the company. So by seeing the market capitalization, you can tell how good the company is or how bad the company is. So market capitalization plays a very important role. So for example, the price of a company share might be high, but that doesn't mean the share is a very good share. the company is a very good share because the number of shares the company has may be low. So that means the company is a small company. Just because the share price is more doesn't mean that the company is big. Just because the share price is less doesn't mean the company is small. Okay, so the share price doesn't determine the size of the company because the share price is just the price of the share. The number of shares that are present into the market has to be included. So a company's share price may be 100 rupees, but the company might be very big because the number of shares it has may be very huge. So that is what is called by market cap. Market cap shows you the actual size of the company, how big the company is and how small the company is, thereby help you in making a buying and selling decision. Let me tell you the different types of companies. So there are small cap companies based on capitalization, market cap. You have the small cap, you have the mid cap, you have the large cap. So the market cap of the companies, if it is 500 crore. So I told you use the formula number of outstanding share and the share price. If you multiply both of them, if you get a number of 500 crore, if the market cap of a company is 500 crore, then it is a small cap. 500 crore is a small cap company. Mid cap, if the price is 500 to 7,000 crore, if the price lies between 500 to 7,000 crore, the company is said to be a mid cap company, or the stocks are said to be mid cap stocks. So they generally perform well, and the large cap stocks are generally stable. So the large cap are the big companies. So the market capitalization is very big, that is 7,000 crore to 20,000 crore. So if you multiply the share price and the number of shares, you must get 7,000 crore or 20,000 crore. Here you must get 500 crore to 7,000 crore between them. So this is how you see the market capitalization of a company. It is available. You don't have to calculate also, but still you can verify. You can see the share price and the number of shares and multiply them and get the market capitalization. Next you have the importance of market capitalization. Why market capitalization is important? You can just randomly choose a company, see which company is good, or you can see the share price. Why do we need market capitalization? So this point will clear you why market capitalization is important. A high stock price in and of itself does not always indicate a healthy growing company. As I told you from the beginning of the video, the price of the share doesn't show how healthy or growing the company is. The price of the share may be more or the price may be very less. It doesn't determine anything. The price of the stock cannot tell you how healthy or poor the company is. So a high stock price in and of itself does not always indicate a healthy or growing company. A high stock price doesn't mean the company is a healthy company. It can still have relatively small market cap because the number of shares may be low. If the number of shares are less and the price of the share is more, so the market cap of the company is less. So the company has small market cap, as you saw in the formula. So here the most important formula that we studied today is in the market capitalization video, the number of outstanding shares into the share price is the market cap. Just remember this formula. It is very important for fundamental analysis because you need to find the market capitalization of the company to guess the price of the company. Next, we have that's it, market capitalization. And just remember the market capitalization formula. Now thank you very much for watching the video. Do like the video and comment your feedback how I can improve my videos, and watch all the series, all the part of all the videos in my series to understand every concept of fundamental analysis and to become a good fundamental analyst, to be able to analyze the company shares. So do create a demat account. If you don't have it, subscribe to the channel would be excellent.